What if I told you that one of the most ignored assets in the world is about to shock everyone and possibly enter a completely new price reality? Right now, most people are watching stocks, AI, and headlines. But behind the scenes, something much bigger is quietly building, something that could send silver into a massive move that very few are prepared for. Welcome to Gold Silver Scope, where we break down the real story behind gold and silver in the simplest way possible. And today we're going to talk about something extremely important: why silver may not just go up, but could explode into a range that most people still think is impossible. Let's start with the big picture. From a long-term perspective, nothing has really changed in the core trend of monetary metals. In fact, the outlook is still very strong. Both gold and silver are in a powerful upward cycle, but silver, in particular, is a very special case. For nearly 50 years, silver has been trapped in a range between roughly $4 and $50. Think about that for a moment. Half a century, and no real breakout. That's not normal. If you look at other metals, they don't behave like this. For example, copper stayed in a similar long-term range for years, but when it finally broke out around 2005, 2006, it didn't just move slowly, it exploded, gaining multiple times its value in a very short period. The same thing happened with lead in 2007. It stayed quiet for decades, then suddenly shifted into a completely new price reality. So the real question is, why didn't silver do the same? Why did gold continue to make higher highs in every bull market, while silver remained capped again and again? No matter the exact reason, what matters now is this: that long-term suppression appears to be ending. The structure that kept silver contained is starting to break, and when something stays compressed for that long, the eventual move is usually very powerful. Based on multiple long-term indicators, there is a strong case that silver could move into a much higher price zone, not just $100, but possibly $200, $300, or even higher in a relatively short period of time. Now, this doesn't mean the move will be smooth. In fact, what we are seeing right now proves the opposite. At the end of January, silver experienced a sharp and sudden drop. Almost the entire decline happened in just a few hours. That kind of move can shake confidence and make people think the trend is over. But in reality, this kind of volatility often happens inside a strong uptrend. Since that drop, the market has been moving in a very choppy, sideways pattern. Up and down, fast moves, uncertainty. This is what a correction phase looks like. And corrections are normal. In fact, they are necessary. Even if silver is heading toward much higher levels, it won't go there in a straight line. It will move in a zigzag pattern. Rally, pull back, rally again. What's important is not the short-term noise, but the bigger trend underneath. The key point here is that the recent drop did not break the long-term structure. It only affected the short-term movement. The deeper, long-term indicators, the ones that define the real trend, are still strong and intact. Now let's briefly talk about gold because it helps us understand the bigger picture even better. If you look at previous bull markets in gold, there's a very interesting pattern. In the late 1970s, gold made a massive move, about 8 times its value in just a few years. Then again, from the early 2000s to 2011, gold repeated almost the same kind of move, another 8-fold increase. So if gold were to simply repeat what it has already done in the past, we could be looking at prices far higher than where we are today. And yet, many people think gold has already moved too much. But when you compare it to history, it may only be halfway through its potential cycle. Now bring silver back into this picture. When you compare silver to gold, silver is still extremely undervalued. Historically, silver has traded at much higher relative levels compared to gold than it does today. In simple terms, silver is cheap, very cheap. And markets don't stay out of balance forever. When something is undervalued for a long time, especially in a strong macro environment, it tends to catch up. often very quickly. That's why many analysts believe that silver's real move hasn't even started yet. What we are seeing now could just be the early phase. So while short-term price swings may look confusing or even scary, the bigger story is still pointing in one direction: higher. Now let's go deeper into what really matters. The signals that most people are not paying attention to. Right now, everyone is focused on obvious things like AI stocks, tech growth, and big headlines. But in markets, the biggest risks usually come from places where nobody is looking. And one of those places today is the financial sector. This is where things start to get interesting. When we analyze markets properly, we don't just look at price. Price can sometimes hide the real story. Instead, we focus on something more powerful: momentum. Because momentum often gives early warning signs before price reacts. And right now, the momentum in the financial sector is showing clear weakness. We're not talking about small banks or regional issues like we saw a couple of years ago. This time, even large financial institutions are starting to show cracks. The structure that has supported them for years is beginning to break down quietly. If you just look at price charts, everything might look normal. Maybe just a small pullback, nothing serious. But when you look under the surface, the story changes completely. Momentum indicators are breaking long-term trends, something that doesn't happen often. And when it does happen, it usually means something bigger is coming. This weakness is not just limited to banks. It's also showing up in areas like consumer credit, credit card companies, lenders, and financial services. Many of them are starting to behave in a way that suggests stress in the system. Now think about this. The entire global economy runs on credit. When credit starts to weaken, it creates pressure everywhere: businesses, consumers, and markets. And when that pressure builds up enough, central banks are forced to react. This is where gold and silver come into the picture. Because historically, whenever there is stress in the financial system and central banks step in to support it, the result is usually the same: more money printing, more liquidity, and a weaker currency over time. And what benefits from that environment? Monetary metals. Gold and silver don't rely on earnings, growth, or business performance. Their value comes from something much deeper: trust in the financial system. And when that trust starts to weaken, these metals become more attractive. Now let's connect this to the stock market. At first glance, the stock market might still look strong. But again, when we analyze momentum instead of just price, we start to see warning signs. Long-term structures that have been in place for years are starting to break. For example, the trend that supported the market since 2022 is no longer as strong as it used to be. Momentum is flattening, and in some cases, already turning down. This doesn't mean the market will crash immediately. In fact, short-term rallies are still possible, but the foundation is no longer solid. And when the foundation weakens, it only takes one trigger to create a larger move. The same pattern is visible in major indices. Price may still be holding certain levels, but momentum has already broken important channels. This tells us that the market is becoming vulnerable. Now compare this with gold and silver. While stocks are showing signs of weakness under the surface, the long-term momentum of gold and silver is still strong. Even after recent pullbacks, their bigger trend remains intact. This is a very important difference, because as an investor, the goal is not just to follow what is popular. The goal is to identify where strength is building and where weakness is growing. And right now, the data is clearly showing a shift. If we compare gold to the stock market over the past 10 years, something very significant has happened recently. For a long time, gold and stocks were moving in a similar way. Neither was clearly outperforming the other. But that has changed. Gold has now broken out of a long-term base relative to stocks. This means it has started to outperform, and not just in a short-term move, but from a structural, long-term perspective. This kind of breakout doesn't happen often, and when it does, It usually marks the beginning of a new phase. The same thing is happening with gold mining stocks. After years of underperformance, they are now breaking out as well. This tells us that the entire precious metal sector is gaining strength. And then comes silver. Silver has shown an even more powerful move out of its base. Yes, it is volatile. Yes, it moves up and down aggressively. But that's exactly how strong assets behave in the early stages of a major trend. What we are seeing right now is not weakness. It is a normal correction after a breakout. Nothing goes straight up. Every strong move needs pauses, pullbacks, and consolidation. These phases are what prepare the market for the next leg higher. So when you step back and look at the full picture, a very clear contrast appears. On one side, you have a financial system showing hidden stress, weakening momentum, and growing risk. On the other side, you have gold and silver showing strength, breakouts, and long-term upward trends. And this is exactly the kind of environment where major shifts happen. Because when capital starts moving away from weak areas and into strong ones, the moves can be fast and powerful. Now let's bring everything together and understand what could actually trigger the next big move in silver. We've already seen that the financial system is starting to show signs of stress, banks are weakening under the surface, credit conditions are tightening, and momentum in the stock market is no longer as strong as it used to be. But the real question is, what happens next? Historically, when financial pressure builds up to a certain level, central banks don't just sit and watch. They step in. And when they step in, they usually do one thing. They add liquidity into the system. This can come in many forms. It could be interest rate cuts, it could be new lending programs, or it could be more direct forms of money creation. No matter what name they give it, the result is often the same. More money in the system and less purchasing power for each unit of currency over time. And this is the environment where gold and silver perform best. Because at their core, gold and silver are not just commodities. They are monetary assets. They reflect the real value of money itself. So when currencies start losing value, these metals naturally move higher. Now think about the situation we are in today. We already know that global debt levels are extremely high. We know that economies depend heavily on credit, and we are starting to see early signs of weakness in that system. If this weakness continues, central banks may feel pressure to act sooner rather than later. Even small changes in policy can have a big impact. For example, if unemployment starts to rise, central banks can use that as a reason to cut rates. They can say they are supporting the economy. At the same time, they may choose to ignore other factors like rising oil prices or inflation in certain areas. In simple words, they will do whatever is necessary to keep the system stable. But in doing so, they may accelerate the long-term decline in currency value. And that is exactly what supports a strong move in gold and silver. Now let's focus again on silver specifically. While many people look at silver only as an industrial metal, its monetary role is often underestimated. Yes, it is used in industries like solar energy, electronics, and manufacturing, and demand in these areas is growing, especially with the global push toward renewable energy. But the bigger story is still monetary. Silver has always been a form of money throughout history, and when it is undervalued compared to gold, like it is today, it tends to catch up during strong cycles. Right now, silver is still trading at a very low relative value compared to gold. In past cycles, this gap has closed quickly, and when it does, silver usually moves faster and more aggressively than gold. That's why the potential upside in silver can be so powerful. If the current trend continues, and if the financial system pressures increase, silver could move into a completely new price range. And because it has been held back for so long, the move could happen faster than most people expect. Not in years, but possibly in months. Of course, this doesn't mean the path will be smooth. There will be volatility. There will be sharp drops and sudden rallies. That's the nature of silver. It tests patience. It shakes out weak hands. But the long-term direction is what matters most. And right now, the long-term signals are still pointing higher. So the real question is not whether silver will move. The real question is, will you be ready when it does? If you want to stay ahead of these moves and understand what's really happening in gold and silver markets in simple and clear language, make sure you subscribe to Gold Silver Scope and stay connected. Because here, we focus on the signals that actually matter, not the noise.